Good afternoon, grinders. Happy hump day. Happy Wednesday to you. Hopefully, you are having a wonderful day so far. So, let's jump right into it. So, the market is moving and moving well. We talked about Oracle last night and during the day. And look, this is a result right now. I believe this hit 40%, but the stock is up 40% in one day, and it's driven by cloud computing. If you did not watch last night's after hours video, definitely check that out. I will stop now, get a little information about Oracle there that we provided, and then start back in this vehicle so you're up to speed. But cloud computing and tech is pushing the market higher today, and that's a wonderful thing. And we will show you, even though we were not invested in Oracle stock individually, we do have the trickle down effect to some of the other companies that we are holding. And that'll lead us into our first conversation. We're going to talk about Vertiv Holdings. And this is a shout out to a community member, Ant. He and I started chatting. I think it was either on Threads or on Instagram, and he told me about this Vertiv company. And I knew nothing about it, to be quite honest. But I did a little bit of research after he said this is definitely a big player on the AI trade. Did a little research, and they are a major partner with Nvidia. And think of it this way: they provide liquid cooling. So those GPUs, those chips run really hot. And when they're building these massive data centers, they have to find a way to cool down these chips so they run more efficiently and they don't overheat, right? So Vertiv is a main player in that data center infrastructure build out and a major player to Nvidia. So definitely do some research there. We'll dive into the stock a little bit further, and you can see Vertiv Holdings, it is up 11% today. Yeah, so we didn't get that big run that Oracle had today, about 40%, but 11% on a company that's in our long-term portfolio, that is great. And it's a little bit of ways off of its all-time high of just under $156. So in April, this company took a major hit. Look, we were at $153 in January 23rd, and then come April, we're down to $60, $59.41 on April 4th. So a significant drop, right? A significant drop in April when all the DeepSeek information came out and whatnot. So that kicked us in the teeth hard, but I did not sell the stock. Maybe a couple shares to kind of move some money around, but I held vast majority of that in the portfolio, and I was actually buying shares not at this peak bottom. I don't believe I bought shares then, but when it rode up a little bit more, we started accumulating more. I'm pretty sure we have well over or just around 100 shares of this company. That's kind of our goals. I have 100 shares of a company. Now, some of the companies like Meta, they're $755 a share. It'd be very difficult and be very expensive to have 100 shares there. So we kind of scale it back to like the 50 to 25 shares to kind of start as our base in our long-term portfolios. I will say I did play some options on Vertiv and I got hurt doing so. I'm pretty sure earlier this year I lost $3,000 on a contract, and that contract, that's pretty much paying for the contract and losing all of my premium, everything that cost me to get into that contract. That was our bad play of the year, but it was really just all about timing. DeepSeek and everything in April really killed us. I think we had the contract out till maybe mid this year, and I was playing Vertiv very aggressively because it was running hot beginning of this year, but that that AI trade got turned upside down and we took a hit, a significant hit earlier this year. But in our long-term portfolio, we more than got that money back. I think we're up probably about $750, $1,000 a day just from the shares today. So we'll be just fine holding on to that company. But I did want to provide a little bit more detail on exactly why it was moving today. So they did speak at a conference yesterday. I believe I had the name here. There was a lot of technical information of why the stock was moving in one of the articles, but I didn't want it to get too nerdy. So, but I will go back to that article. I'm sorry. It was the Goldman Sachs Communicopia and Technology Conference, and they address a lot of the concerns that investors might be having. So strong demand for power and cooling. We talked about the liquid cooling. Vertiv highlighted the robust demand for its power and cooling solutions, particularly from the rapidly growing data center sector. This surge in demand is driven by the increasing adoption of cloud computing and artificial intelligence, both of which require significant data center capacity and consequently Vertiv's specialized infrastructure solutions. So Oracle, the reason why that stock is moving is because their cloud computing and the potential growth, or they're saying not potential, they have these large orders that are placed, and because so the stock is taking off because analysts and investors are seeing that companies grow in that cloud computing part of their business. Now they do have Amazon, who's in cloud computing, Microsoft is in cloud computing, and they have other competitors in that cloud computing space, which again, we're already invested in. So that was the reason why we didn't get an Oracle. But this cloud computing is a big business and is pushing the market forward today. So I just want to go over that just very vaguely, and that Oracle trickle down effect. So as well as Vertiv is doing very well, we can look at Nvidia today. Nvidia is up 4% today. Past 5 days, up 4.33%. And remember, this was in the past month we were looking at it. It was down 6.5%. Well, we cut that down to only 2.5% down the past month. So Nvidia is moving in the right direction for us. That's a good thing, right? And I wanted to talk about that trickle down effect on Oracle. So again, I went to Gemini and said, how has Oracle's stock run impacted companies like Nvidia and other tech companies? So massive cloud revenue forecast driven by AI. And we talked about this just a second ago. Oracle reported significant growth in its cloud business and forecasted a substantial increase in cloud revenue in the coming years, primarily driven by the demand for AI infrastructure. Specifically, Oracle CEO Safra Catz stated the company expects its cloud infrastructure revenue to grow 77% to $18 billion this fiscal year and reach $144 billion by fiscal year 2030. They have strong contract backlog, and we kind of reiterating the same things. So I want to get on how is this impacting Nvidia. So increase for demand for AI chips. Oracle's forecast of massive cloud revenue growth directly translates into increased demand for AI chips from companies like Nvidia, AMD, and Broadcom. And we remember we were just talking about Broadcom and that big run that it had recently too. These chip makers stand to benefit from the growing need for specialized processors to power AI workload. According to Barron's, Nvidia stock was up 4.3% in early trading following Oracle's announcements, reflecting company's position as a key supplier for AI infrastructure. And then it's really a validation that this AI trade isn't over. A lot of the analysts, especially Dan Ives, you should definitely pay attention to him when he speaks on CNBC or wherever you get his information from. He says we are still in the early innings of this AI infrastructure build out. Despite all the reports are going to tell you otherwise, just watch the money. Watch the money. Research. I know a lot of this information is hard. It's new to a lot of us. But you can go to Gemini, have to break it down. Explain NVIDIA's business to me like I'm a high school student. and it will break it down to you so it's very consumable. If you don't understand these companies, use these AI tools. If you're not using the tools now, you are going to be left behind. I'm not trying to scare anybody, but take advantage of these tools. They are literally free. Just go to Google and use AI mode. Play around with it. I'm using it every single day. I'm using it to give you guys this information. There's things on here that I don't understand. Just as a, what is the term they use? As a layman, I think, if that's correct. But when I put it in these Gemini models or ChatGPT, whatever you decide to use, it makes it consumable, makes it easier to understand. Also watch guys on YouTube. I told you about Market Mondays and going into Invest Fest. Looking at Earn Your Leisure. Follow them on YouTube. They make it a lot easier for you to understand and very consumable. And some of the strategies they use are very similar to the strategies we use. And they are successful. They are winning strategies. So, invest in AI. That's all I can really say. All right, Apple contract. So, we sold this contract today. Now that I told myself I wasn't going to get rid of this contract, but we have our rule and our strategy that when a stock is up 25%, or if it goes down 25%, 25% is kind of our threshold. So if I buy into a stock and it rises 25%, I then set a floor at its whatever price I paid for it. It rolled up 25%. I will not allow that stock to fall 25% when it rides up 25%. Don't let, when we're talking about contracts, don't let a contract pretty much heavy into the green, don't let it turn back red. Now I could have, because we have plenty of time on this contract, but I just chose to take the profits and we'll rinse and repeat. I think Apple stock is probably going to fall to that 224, 225 range. And if we decide to get in, we may get in again, rinse and repeat. Maybe in the meantime, before we're waiting for that to happen and being patient, there might be another opportunity that comes up. So yes, we're going to stay in this contract for a long period of time, but the cards didn't play out that way. I did want to reiterate again because I know it might be confusing. 25% on a stock. You know what? Let's just do one together. So I have, let's go to QQQ. Okay, this is the contract we have. QQQ is up 30%, right? Our original cost was $35.13. Remember, if it's up 30%, I don't want it to fall more than 25% before I take my money back. That means the momentum's gone. You're playing options. Options is strictly, well, I shouldn't say strictly, but a lot of it is about playing momentum. Okay? When you lose momentum and that contract starts falling lower, it's going to fall significantly more than if the share price is falling like 1%. You could see your contract move 2, 3, 4, 5% plus when you're dealing with options. It's magnified either direction you go. So for this case, we're up 30%. So I want to lock in profits. I have 5%. So 30% minus 25% equals 5%. So I would come in here and I would say, all right, our original cost was $35.13. Okay. So we'll do 35.13 times by 0.05 equals $1.75. So I add that on top of our original cost, 35.13, and that will give us pretty much $37.90. I'd round up. Okay, so we don't want this contract to fall below, I think the number was $37.90. Hopefully, was it 37 or 36? I already got rid of it. Let's pretend it was $37.90. My memory is terrible. So $37.90. So here you see it says sell to close. We're gonna come here to this arrow here, and we're gonna go to stop limit order. Okay. And this is very important. We want this to go out We don't want it just to be for just today. We want this to go out an extended period of time. This will expire in 90 days, so we'll probably have to do it again. So time in force, good till time canceled. You're going to click that instead of the good for the day. And then here, there's a stop price and then there's a limit price. Okay? And it's giving you pretty much this little parameter. The stop price is the floor. Okay? It's going to be that, I think we said it was $37.90. So I put 37.9 in here. Now, on the upper end, I usually do it $1 when we're dealing with contracts are like $20, $30 contracts. I'll move it $1. If it's like $10 or less, then I'll maybe do 50 cents. Okay. So my limit price would be 38.9. So basically it says when it reaches 38.9, that is our limit, our limit price. Is kind of like the top of our floor. Now, if it goes to 37.9, it's going to trigger that stop. It's going to sell that contract, or how many contracts that we decide to sell if we had multiple contracts. And it's going to give us our money close to that $37.90, $38. Okay? It's going to pay us out on that stop price range, not the limit price range. Okay? If it dips, it hits within that threshold. So it's like, all right, it hit 38.9, then it's kind of alert to tell the system, all right, this is their threshold. If it falls to 37.9, 38, we're going to sell that contract. Now, I've told you in the past, if we had this contract in place and then the day closes, and then the next day comes and it falls to like $36, which is below our $37.90, this stop loss isn't going to do a damn thing for us. We're going to have to manually go in there, and if we want to sell it at that lower price, we'll have to manually do it ourselves in a limit order. It's not going to sell it at that $37.90 if it falls to like 36 or lower, or below that 38 threshold with me rounding up. So I hope that's easy to understand. Again, I'm going to roll out that option playbook. I'm leaning towards putting it on YouTube for free. And we're just going to have this account for following the trades and information, following the grind, posts, and things of that nature. So just be mindful of that. Those of you who are in here, you're going to get grandfathered in. I'll find a way to keep the price at $10 a month now. But when I release that options course, more than likely, I'm going to up the price of the Patreon. But you guys will be grandfathered in at the price where you currently at now. I believe there's a way for me to take care of that. If not, I can do refunds and manually do it if I have to. So for the guys that are in here now, thank you for being in here now. But if we decide to release that options course and we don't put it in the Patreon and another membership, then we're probably going to raise the price for this one. So it's just something to keep in mind. But hopefully I broke down the options for you a little bit more, and how I make sure that I don't let a green option go to red. Okay, let's talk about Apple's forward PE. I know we started to talk about it a little bit, but we got away from it. So in a previous report, and I don't have it on the top of my head right now. Oh, let's get that out of there. Apple is down 3%. So remember I said I kind of will look for it to fall to 224, 225 range. So it's not too far off of that. And I want it to fall, and I want the forward PE. You can come to Yahoo Finance. You just scroll down under summary, right? And you have the statistics here. We see a PE ratio, but this is the trailing 12-month ratio of 34 times. Okay. We want a little bit more information, so we're going to go to view more. Okay. And we're going to scroll. Excuse me, you don't have to scroll, but we're going to take a look at this chart right here in the forward PE. We're going to look right here. So that first column, it says current. The forward PE is pretty much 30 times. We want this number to get close to 25 or less, impossible, and then we're going to jump in a trade. There was a stat through Bank of America. Whenever Apple stock moves to 25 times forward PE, the stock is up 100% of the times 12 months past that current date. Okay, and I believe gave us like 7 to 9 examples of when this happened. In the trade that we got in, that Apple contract that was a $200 strike, I'm pretty sure if it wasn't 25 times, it was maybe 26 times. We jumped in and it rose up and went from $200 a share up to $230 a share. So that was another time that it jumped up, and it didn't take 12 months to do so. So I'm going to follow that data, and I'm going to be patient and wait for Apple to move the forward PE to move to 25 times, and we're definitely going to get into another Apple contract. As long as things align, we have some cash that's free to do so. And that's another thing I wanted to discuss just off the top of my head. Do not do this. You want to have at least 10 to 20% cash in your account. There's times that I get so excited and I'll do these short-term plays, but then I won't have any cash to do anything. Now, because we sold that Apple contract, we're going to have plenty of cash. We'll have $8,000 in cash. So we'll be pretty much almost 20% of our current account value, which is good. We want to be in that range. We want to have like 10 to 20% cash ready to execute just in case anything happens in the market. Do not do what I do, because we could have very well got into that Google contract when it was when we had it on our watch list, but we missed that. And there was a couple other plays that we missed. The Robinhood play, we missed that one too because we didn't have a ton of cash available. But at the same time, I probably wouldn't be able to get into this QQQ call that I'm in right now, which is doing fairly well for us because those calls were expensive. So it's a balancing act, but just make sure that you always have 10 to 20% cash of your current account value in cash to take advantage of when an opportunity arises. Okay? Don't do as I do, do as I say. But the Apple contract gave us a profit of, I think, $1,750. So that's good on top of what our initial investment was there. So we'll have $7,000, or excuse me, $5,000 and some change to play around with, and I'll bring our cash total to about $8,000, and we can really make some moves going forward. All right. I know I've been rambling and kind of going off script, but hopefully I gave you some valuable information within that rambling. Robinhood had an event last night. I watched it through the Robinhood app. There's a few things I wanted to highlight. I think most of these updates are going to be coming either not later this year, if not next year. But I did want to highlight a couple of things that I thought was pretty cool. So Robinhood Legend updates. So now Robinhood Legend, and I'm pretty sure I'm not mistaken, is its charts that they've rolled out. We can take a look at that real quick. You see it right up here, Legend Advanced Trading, and that's typically when we're looking at charts, that's what I'm using. I don't really use any charts or any of the other platforms other than Robinhood to look at charts. Okay, so that's Robinhood Legends. But their updates. The desktop platform for advanced traders receives significant enhancements, including over 90 indicators. So indicators are good, especially someone like myself. I definitely want to dive into this and learn how to use these indicators a little bit more to kind of spot some opportunities in the charts without me having to manually do it. It'll just pop up if I have these indicators that are in place. So I definitely need to get into these charts more and start using these tools. As well as the 90 indicators, they have support for crypto and index options and improved options charts. So for the advanced traders who are out there, if you're watching this video, definitely link up with me, join the community. We can all learn and bounce ideas from one another. Robinhood Cortex. Cortex is an AI-powered investing assistant that was announced, with features like custom indicators and custom financial scans planned for Robinhood Gold members in 2026. If you're using Robinhood and do not have gold, I would strongly suggest it. I like it for the fact that when I withdraw, I can withdraw instantly for a fee, or withdraw, and I've never used it instant. I can be patient to get my money when it gives Robinhood gives it to me, or you can be patient and it'll give it to you in maybe like 5 to 7 business days. And one of the tools what I really was excited about, so I wasn't familiar with this. I think Robinhood launched, I could be wrong, in 2013. And when they did launch, it was a social social app for traders. They didn't have any trading at the time when they initially launched, but they're going back to their roots. And a new social media network for investors was introduced, allowing users to share and copy trade ideas and track the activity of top traders. So Vlad was saying, the CEO was saying, they really provide transparency. You're following these traders, and some of these traders may even be placing any trades whatsoever. It's just a lot of fluff and little BS. Well, now you can look and you can share your trades. It's going to be integrated with different other platforms like your Instagram, maybe Facebook Threads, X. And so the information that's on Robinhood and data from how you are performing in that trade is going to be able to be relayed on these other social medias as well. It's not just going to be all in-house. I think there's also a tricky way for them to start inputting ads into the social aspect, and that could be more revenue for the company as well. So that'll be great. I'm excited because I definitely want to use it. You can also do it for event contracts. So for some of these sports bettors, if you're betting sports on there and you say you like a certain team, you can share, I'm putting my money behind my conviction or whatever I believe in my team. So I think it's going to be an awesome tool to use, and I'll be excited to use it and hopefully build a following on Robinhood Social when it launches. And last but not least, Amazon Zoox. I did want to talk about Robinhood's stock, see how it's performing. So it was up today, but we're pretty much flat right now. That's unfortunate. It was up to $123, which was an all-time high. So of course, it's going to come off that high. Remember, when it hits all-time high, I like to look 5 to 8% off of that high. So if we just do some quick math, I'll just 123 times 0.05 is 615. Why did I just put that in my... So we are pretty much 23 minus 16. 117. We're almost there. I still think I would probably wait for it to pull back a little bit more. I think we're kind of well ahead of the analyst average. I would probably wait for it to fall to like 110 before we start getting back in. 23 minus 12. Yeah, maybe like 115, 110 range before you consider jumping back into this one. Let's just let it ride out and be patient with that one if you missed it. Okay, and then Amazon Zoox. If you're not familiar with Amazon Zoox, why can't I find Amazon? Amazon's down about 3% today. I believe it is because of Oracle. Remember, Oracle, their stock is up because of their cloud business. Well, Amazon's big growth driver is AWS in the cloud. And so they're probably down because Oracle's up today. But they did announce that they are launching Zoox. So Zoox is their robo-taxi service, and they're offering it in Las Vegas now for free. And so anyone with the Zoox apps, and I downloaded the app, will be able to request a ride to 5 designated locations in Vegas, including Resorts World, the Luxor Hotel, and New York Hotel. Now, I am going to Vegas in a couple weeks, so I'll definitely try my best to try this out, make a video, and share it with you guys. So definitely follow me on my social medias. I'll try to post it in this video's description. Again, like I said, stock slips. They're our Oracle Cloud competitor, so Oracle is going crazy. Amazon stock's going down. They're also using kind of Netflix playbook for their Amazon Prime subscriptions. So remember Netflix, a lot of people were sharing with families, and Disney Plus of that as well. And they got rid of that, and everyone had to have their individual account. Well, going forward with Amazon, that's the same thing. In October 1st, they're going to kick off the people that are in that family deal, and you're going to have to pay for your own Prime membership individually. So just be mindful of that. That's going to go in place October 1st. So that was a lot of information I threw at you guys. I know I went off script at some points, but hopefully provided some valuable information. And we'll chat later tonight.